All right. Welcome back. Happy Monday. Oh, baby. Morning, everyone. Good morning, everyone. Crazy Monday. It feels like we're finally. It's just the market's back alive, right? The market is back alive. The volatility has arrived. Morning, everyone. Welcome back. Buenos dias. Go over Microsoft. Yeah, I didn't post Microsoft today because I think it's just a shit show, but I will go over it here. I sort of hate the chart. That's why I sort of left it out. But we'll go over it. Good morning, guys. Welcome back. We're gonna jump in pretty early here, guys, because we got a lot of things to cover. So I don't want to run out of time today. So, good morning. Welcome back. Press that like button. To you guys that are here early, you're gonna catch the first half of this live stream. To those that trickle in late, they're gonna miss it. So, let's go ahead and get started right away. Press that like button. Subscribe to the channel. Here we go. So first thing I want to talk about, I just want to give you my brief understanding of what's going on. I think everyone needs to understand first that the tariffs are absolutely a negotiating tactic, right? That's at the core of what it is. That's what it is. It's a negotiating tactic to try and come to an agreement with other countries. It is not a tariff to just fuck everyone, really. That's my personal, my personal take on it. It's a negotiating tactic to get things done for the betterment of the United States, and that is what I believe is the reason for it. So, with that said, if a deal is made due to the tariffs, I would assume that the panic starts to go away very quickly. Now, when that happens, I don't know. Now, the reason that is because that is a possibility, we are in for a lot of question marks and a lot of headline risk, right? A lot of headline risk. Any moment of the day, of any day over the next few days, we could just see something come out and everything change, right? So this is a very difficult thing, right? And this is why I've made some tweets over the weekend about I think it's time to be careful on the swing trades. It's time to be cautious on the overnight risk. It's time to be cautious about what risk we have just sitting in our portfolio. And maybe it's right to be a little bit more cash heavy because we do not know what is going to come out. There is going to be pending news without a doubt here. You get one piece of news that says Canada has agreed to do something or Mexico has agreed to do something and the tariffs have been reduced, market's going to push, right? Or we see news that China's going to get worse, right, and push tariffs against us, market's going to tank. So a lot of headline risk. That is something to be very careful of, guys, moving forward, okay? You need to understand that. At the core of it, again, I will reiterate, the tariffs are a negotiating tactic. It is not just a long-standing tariff that will go on forever, in my opinion. This is a negotiating tactic to get something done, to get a deal, to get something that benefits the U.S. I think it's almost guaranteed in my mind that over the next, I say month, something will resolve, right? There will be a resolution. That's always something that typically happens here. A resolution will come that mutually benefits maybe both, but probably more the U.S., and that is what I expect. So that's my read. Take it or leave it. If you don't like it, I'm sorry, but that is what I believe will happen here. I think that's the logical, right? I think that is the logical explanation. Instead of the panic attack, oh my God, I can't believe this, everything's going to go so bad, right? I think the logical thing that's going on here is that a deal is likely going to come out of this. That is the negotiating tactic that's going on. So, with that said, Let's move on. Let's keep going. Let's go quick because we got a lot of things to talk about. Next, Matt, on top of that, you have economic data this week, right? Economic data, right? We have the ISM manufacturing PMI today at 10 o'clock. Tomorrow, we have JOLTS, job openings. That's tomorrow. Wednesday, ADP non-farm employment change, ISM services PMI. Thursday, unemployment claims. So we do still have our normal economic data. So just know that as well, right? That as well. Now, on top of that, we also have some major tech earnings this week, which also throw a monkey wrench in a one direction, idea on the market. So today, after hours, we have Palantir. That's a big name. Let's see what happens there. NXPI. Tomorrow, PayPal, Spotify, PepsiCo, Pfizer, AMD, Google. After hours, two big tech names. Uber, Walt Disney, Qualcomm, another big semiconductor. ARM, big semiconductor. Amazon, right? So a lot of earnings as well that you throw into the mix. Again, I think leading to the decision of heavy cash, overnight risk is something you don't want to be a part of. Let's scalp it. Let's take advantage of it. And let's be low risk into the overnight session. Now, let's jump into the technicals. Let's talk about where you are trading. So, in my opinion, this is the worst spot to short into a hole. The absolute worst spot to short into a hole is where you are trading right now in the Nasdaq futures. You are right back into our 20,100 to 20,070, 21,000 to 20,070 demand zone, right? You are right back into the level that is held over the last month and a half, right? Every single time we've traded down into this level, we have held this level. So, do I think it's smart to short into this hole? I do not. And so this makes it a little bit tricky, right? You can see lows from the last gap down on DeepSeek. And here are the lows again. So I really don't like shorting through this area right here. The only short that I could possibly find here would be under 21,000 to 20,700. That would be the short that you could look for if we even get that, right? So under 21,000 right here into 20,700. This is maybe a short you could look for in here. That's something you could definitely keep an eye on today, right? That is definitely a short that I will be paying attention to because that would also be a gap fill on the QQQ. So under 20,700 into 20,000, under 21,000 into 20,700 is a nice short you could watch. However, we need to understand that there is demand down below. 21,000 is the same spot we held on the last gap down on DeepSeek, right? And we are right back in that level, right? Right back in that level. Let's be careful right there, right? That is a caution spot. It's not going to be easy around here. This is going to get very tricky. There's going to be a lot of dancing here, a lot of bailando, right? A little bit up, down, a little up, right? A lot of volatility at this 21,000 spot. So please be cautious trading around here. Under this level, if we get convincingly under this level, I would say shorts are very nice into 20,700. And then that would be that extreme low to pay attention to. Now, if we zoom in a little bit closer, we can start to see the areas that are starting to hold, right? The areas that we're starting to react to. I think this is a very clear read so far in the Nasdaq futures. So let's pay attention to this now. So right now, we can see that there was a high that was created in the overnight session at 21,150, right? I adjusted some of these levels. So you guys that are in the Discord, I adjusted this since we posted the levels this morning. So I would adjust these with me. If you want to go ahead and do that, up to you. But for now, I can see that there is some high right here around 21,150 that was previous holds right here and previous holds right here, right? 21,150, 150, 150. That was a rejection point this morning or last night in the overnight session, which drove us lower into 21,000, right? You can see right now that 21,150 level is trying to turn back into support. So that is absolutely a first level to watch today be careful right here if you're looking to short this. Be careful right here around the retest of 21,150, which is trying to turn into a new support. Very, very important there. Now, below that level, you have the 100 SMA, right? The daily 100 SMA. And if we go out to the daily chart just one time, right, I want to show you this. Look at what's happened at the daily 100 SMA for the last 4 or 5 months. Boom, 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 boom. And here we are again. So we need to be careful here. What happened here? 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 Right? Once we break it, maybe some downside. Once we break it, maybe some downside. We have not broken it. So be careful at the 100 SMA, right? Please be careful here. This is a very big spot on the Nasdaq futures. The daily 100 SMA will be a interesting zone to watch today. Do we break below it? Do we hold above it? For now, we're holding above it. If we break below it, right? If we break below this 100 and break below 21,000, we're going lower without a doubt. And that's your short, right? But for now, we're above it. We need to be careful. Now, moving forward, 21,260. These lows right here. See these lows right here? See where this market tried to, well, at first it rejected here. Then it rejected here again. And then it held here. And it created that upside continuation. You can see right now in the pre-market that we are rejecting that level once again. 21,260. So that is somewhere to be careful today, right? We could see the pop and fade at 21,260. If that 21,260 rejects and brings us lower, then that could be somewhere you could look to fade that level right there. Now, if you get above 21,260, my favorite pop and fade spot, right? And I think that is probably it's definitely a trade to look for today is the pop and fade, right? How do you resolve the problem of shorting into a hole? Let the market grind higher and look for the fade, right? That's really what you're looking for if you want to short this market. My favorite two spots, number one, 21,400. That's these previous Wednesday's lows and these Thursday's lows. You can see the two lows that came in huge last week. If we trade up into that level today, that could be a fade spot, right? That's fade spot number one. That's F1. F1, fade number one, 21,400. For me, that's the only spot to start, right? I would not fade here into the 100 SMA. It's too tight of a zone. I don't like that. Now, this is really fade one under 21K. That's really F1 right there. Other, fade two would be 21.4. Here's F2, 21.4. If we push into that, that's fade number two. I'd watch that. Now, the third one, and probably the most aggressive one if we even get there, would be right here at 21,560. That would be the gap fill reversal, right? That would be the gap fill reversal, which would be 21,560. That is the overnight gap down, that is the gap fill, and that is the reversal right there, okay? So you have a few really strong fade spots today, 21,560 and 21,400. I would absolutely watch out for these spots. This is the 20 and 50 SMA. Those are big areas to try to trade back up into and definitely could see the rejections come in. Now, I want to make something very clear. You are in a market where one tweet invalidates everything, right? So it's not going to be very easy, right? One tweet, if you're looking to fade 21.4 and you're starting to see some failures here and Trump tweets out, hey, tariffs have been reduced, bam, right? That's the problem here, guys. And that's just the unfortunate truth. And we need to be cautious of that. We need to be understanding of that. And we just need to take the right actions to resolve that risk, right? Maybe we scale down positions. We take really quick profits. We keep our stops very tight, right? We don't let things go against us if we're starting to see something move against us, right? Unfortunately, that's just, the way it is. So 21,260, 21,400, 21,560. Those are the three upside levels I'd be watching today. I would personally not be interested in longing this market if we are trading up into these supply levels, right? I really don't think it's right if you're still trading underneath the 21,560. I'm really going to keep myself from doing that, right? It just hasn't, it's not been great. I want to really be careful of doing that today, right? I've been on the wrong side of that idea a few times, last week. So I'm really not too much of a fan of longing here if we are under this 560 gap fill level. I think anything inside the gap fill could be fade potential, right? Anything inside the gap fill is fade potential. Over the gap fill, a reclaim above 560, that is the bulls come back, right, strong. If we fill the gap and hold back above it and hold back above the daily 50, then yeah, the bulls come back in strong, right? But anything under this, I think is fade potential. 21.4, right? 21.260, big fade spots. I would watch those. If you really want to trust that the downside demand holds, your really aggressive long spot would be something here or something here. But I think I don't think you need to be the first person to that trade. Could it pay off very aggressively if you're right? Yes. But just know that, probabilities may be against you on that. 21.150 and that 21,000 flat, major demand down here alongside the 100 SMA. It's a nice technical demand, right? It's a nice technical demand. But yeah, I don't think I want to get into that game just quite yet, right? I want to at least see the market trade a little bit. So that's that. QQQ is actually a very clean read here today. The best fade spot there is out there today is right here at 520. 520, which is the same thing. It's the gap fill reversal. That's your best fade spot of the day. 520, that's also the 20 and 50 SMA. If you start to get up in there, that's likely a fade spot you can watch, right? At the 520, the gap fill, and the rejection, right? Right there. So 20 and 50 SMA, 520, keep an eye on that. That's definitely a spot to look for if we do reach into it. Make sure you understand red alert, right? That's the red alert level for you guys that are in the chat. I think 520 is our red alert level if we do get up into that level. Now, I want to make something very clear here, right? Something very, very clear. This is the definition of shorting into a hole today if you don't get upside before you look for the downside. You guys can see here on the 4-hour chart, this is the previous all-time highs on the QQQ. 500 to 504 is a previous major all-time high on the QQQ from back in July of 2024. We saw July of 2024 reject, and we saw a following downside market of around 15%, right? It came right off the 500 to 504 zone. Now, we move forward. We can see that level again rejected here. That level, that zone, turned into support in November, which led this market higher. Over the last 2 months, the QQQ has maintained and just basically sat above that previous all-time high for about, all of December and pretty much now all of January, right? We have just sat, all of December, all of January, and now the first few days of February, we are just sitting above that previous all-time high right there. So, in terms of the bigger picture, that is still, my friends, just a consolidation above all-time highs, right? Even with all the panic and all the hysteria that you see online, you have still maintained above previous all-time highs, and you are still channeling sideways, right? This gap down has not broken any kind of major market structure. Under 500, yes, right? That's a big break and definitely a bearish structure, right? A bearish structure break for sure. No doubt about it. But for now, we are still above that, right? And so you need to understand that, right? That is also right where the 100 SMA is. That is also right where the deep sea gap fill or the gap held. That is also right where these lows came in. Right here, right here, right here. And here we are again, hovering right above the 505, 506 area, right? You cannot short into this hole. It just doesn't quite make sense. If you break under this and break under that 100 SMA, then probably the downside starts to come in and you will have plenty of time to react to that, right? Plenty of time to react to that if that does occur. Now, 511, 511, 511, 511, 511, 511. Here we are again at 511, 511, 511, 511, 510, 511, 510, 511, 510, 511. Here we are again. Same exact level. That level holding in the pre-market. That level holding in the pre-market right here. Bam. Now, this is where you need to be careful, right? Today, this could be something that holds this market higher. If we break under that 511, I think you will probably see that weakness come back in, right? Probably back down towards that 505, 504, and that daily 100 SMA. And that would be a huge test down there. But for now, you are holding above that level, and that is very important. The next fade spot, in my opinion, is the gap fill right here, 520. 520 and the 20 and 50 SMA. Okay? Careful shorting into a hole. Be careful shorting into a hole. 59.50 ES, big spot. Under 59.50, you have a gap to fill. So under 59.50, which is right here, you have a gap to fill to 5,900, right? Under 5,900, you get to 58.70, and you come back down to 5,800. But for now, here is where you need to hold at 59.50. That's 59.50, and underneath that, you have a gap to fill to 5,900. That would be a very nice short today if we do, in fact, see 59.50 turn into a rejection, right? If we do see that rejection come in, gap fill to 5,900 is a very possible trade you could look for, right? Very possible trade you could look for under 59.50 into 5,900. We'll also show you that gap on the SPY. It's very clear. Now, looking to the upside, the level that you need to be looking for a rejection at today is, I believe, right around here to 6,000 to 6,010. You can see these previous lows, these previous highs, these lows right here, these lows right here, and this could be a very interesting rejection spot. Right around that 6,000 to 6,010, right in there, right? That's also right by that daily 20 SMA. That could be a very tricky spot. 60-20, 60-10, all up in here could start to get a little bit tricky on the ES. You would be trading back into these lows, back into these lows, back into these highs, and back into these lows right here. That could get a little bit heavy, right? And that could definitely start to see a rejection come in. If that rejection right here leads to a fail under 50, that is almost a guarantee in my eyes that you get that gap fill, right? If you see something along these lines, weak buyers, sellers take back over at this supply, rejection of the daily 20, you fail back lower, back under 59.50, right? That would almost guarantee to me that you're going to get that 5,900 gap fill, right? So that is something you definitely look for today. You also look for that daily 100 SMA rejection, which you are definitely seeing some failures near this spot today, right? So make sure you pay attention to that as well. Now, if we get higher, this is definitely the big kahuna. This is the big heavy spot that I would definitely look to fade, and that's the 60.50 to 60.60 area. Near that 50 SMA, previous lows, previous lows, previous lows, previous lows, right? Lows here. This is definitely going to be a heavy, heavy spot if we get above it. All in here, 60.40 to 60.60. This 20-point zone on the ES, big time, right? Major lows, major lows, major lows, major lows. If we do get up into that, be careful, okay? That could be big-time red alert. Now, over 60.65, if we are able to reclaim that level, which would be shocking, but if we are, that is bulls back in control big time, right? If we reclaim these lows and start to hold back above the 50, hold back above this gap fill low, then bulls back in control for sure. But that is yet to be seen, right? And there's going to be a lot of stuff that happens before we see that. SPY. So here's your gaps, right? Here's the SPY gap fill that I think a lot of people have on watch today and very well could be a beautiful trade, about a 5-point trade. Here's your SPY 590. That is the exact low from the previous DeepSeek gap down. Right here is the exact same low you came into. 590 on the SPY. 590, 590, 590. 590 is monster. Monster, monster, monster 590 on the SPY. That is a must hold. You break under 590 today, you have a gap to fill. This is a gap right here. 590 to 585. I will show it to you right now. If I take off the extended hours, you can see right here, guys, between 590 right here. Between 590 and 585, you have nothing but a gap right here. Gap. All this, nothing here, gap fill right there. So if you break that 590 today, you should be looking for that gap fill downside to 585. Now, the only thing that gets me a little bit cautious there, is the 100 SMA that would be trading around 586, which is probably where you'd want to start taking profits, right? If you short the 590 fail, probably I would start taking profits near the 100 SMA and near that 585 demand. Now, to the upside, really clean fade spot today, really clean rejection potential today, 596 to 598. If you guys remember this level, this is the level that held last week, right here, that kept this market higher. Kept it higher, kept it higher, kept it higher. All last week, every drop into that 598 level is what kept the market higher, right? So look, you had Monday, we reclaimed 596, got above 598. Monday into Tuesday overnight, 598 holds. Tuesday, drop, 598 hold, kept the market higher. Wednesday, FOMC, drop, 598 hold, kept the market higher. Right here, not quite 598, but around that 601, drop, kept the market higher. So, if we are trading back into those lows, that is a very potential fade spot, right? Right here, 598 to 596. Not only is that the previous lows, guys, but that is also the 20 and 50 SMA, which is going to be tough to get back above, right? So if we trade higher into this 598 area today, guys, please be careful of that sort of rollover. This could just be sort of that, bear or bull trap, weak buyers into that supply. Maybe some short covering is what gets you there, right? Maybe you have a short covering morning, which just sort of slides the market higher, pretty weak, and eventually we roll over at that 598, right? So please be careful at that 598 spot and that 50 SMA. That is absolutely a tough wall to get above today and could quite possibly be the best fade of the day, okay? Underneath 590, you get gap fill to 585. Do I want to look at let me see if I want to show one last thing here. Let me go to the daily chart. Yeah, I mean that is the last thing I wanted to point out. What the 585 is, right? Do we remember what the 585 is? So remember we just talked about the gap fill from 590 to 585, right? Remember we talked about this gap fill from 590 to 585. We need to remember that if that gap fill does occur, that you will need to start de-risking the short positions. Why? Why would I want to de-risk shorts from 590, right? If I get a short from 590 towards 585, I need to understand that this is a profit-taking move. And why is that? Because that is the previous all-time high on the SPY, which has held right here, which has been a very clear hold over the last few weeks and months, right? And is also going to be the 100 SMA. So if we do get that gap fill to 585 today, please be careful of what happens there, right? That is the exact lows that have really held on here on this market. Anywhere between that 585 and that 580 zone has been a big buy zone, right? Really big buy zone. All in this zone, right? Previous highs, major lows, right? And that could very well happen again, right down in this zone again. So please be careful down there into 580, 585. Okay? All right. Let's go ahead and move on to the IWM, which was a beautiful fade there at the 230.60 spot right here. You guys can see 230.60. We had that level all week. And what an eventual fade that came in there. Beautiful. 230.60, rejections, really nice fails, really clean level, nice downside move. Now, today, you guys can see the 219 spot right there on the IWM, lows, and here we are again at the lows. That is also the 200 SMA, which is very close as well. So, be a little bit careful near that 200 SMA on the IWM if you are looking to fade it. I would look for rejections here around this 223, 225 zone. It's like 223, 224, right? Anywhere within this 223, 224 area, you can see previous highs and previous lows right there. So I would pay attention to that as you move higher. Be careful of fades at these lows right around here as we push higher. That's also right near the 20 and 100 SMA, okay? So that's what I would be watching. Dow Jones, right back down to our 44,000. We went from our 44 to our 45, and we're right back down to our 44. So that's actually quite a good hold on the Dow. 44K, 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 and here we are again, 44K. So 44,000 on the Dow Jones alongside the 20 and 100 SMA, right? 50, 20, 100, all stacked up right here. I would say anywhere between 43.7 and 44 is definitely an area to be careful on the short side, right? Anywhere between that 100 SMA and the 44K, anywhere in here could get a little bit tricky. Underneath 43.7 and the 100, then you get more downside, okay? All right, let's jump into the SMH, because the SMH is definitely something in focus. Obviously, the semiconductor staying weak after that, sort of comeback last week. We had a nice push last week, but we rejected very clearly at that daily 20. Very nice smackdown at the daily 20. We can see that 251 spot. Just another smackdown right at those highs. However, where did the SMH trade back to? It traded back once again to this demand zone, right? Lows, 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 and here we are again. So what happens here again, right? This is going to be tricky. Do we hold this again? Do we see another just sort of gap fill and another fade to the upside? Or do we finally get a break under 230, right? That's really what you're looking for. If you want to be like heavily short SMH, I would say you need a break right here. Under these highs, under these lows, under these lows, under these lows, under 230 is where you can really, really get aggressive on the short side. But until then, I mean, it's really just a complete channel. Just another complete channel. So, in my opinion, if you want to really short this SMH, you got to get under 230. That's what I would look for. Okay. All right, 8:30. We got through all the indexes, whatever people want to say. I've gotten flamed before for saying indices, so I don't know. It just seems like that's the plural for index, but I could be wrong. Thank you guys for being here. Press that like button. I'm trying to go quick today, man, because we got a lot of things to go over. So here we go. Tesla, 400, 385. That's your zone today. If you fail 400 and the 50 SMA, that could be a fade to look for today. 400 fades, very possible. You have to get under 385 for more downside continuation. Okay? You need to get under 385 for more downside continuation. So I would look for a fade under 385. If you fail below that, that could be a nice drop, a break and retest below these major lows, right? That could be really nice. Now, what I like even more is Tesla to give you a little fake pop into 370. That would be really something you'd look for. That may have already happened this morning. So watch that 400 and that 50 SMA. Watch that rejection. Watch that 385 low. Okay? 400, 385. If you get above 400, then this sort of gains strength again, which I'd be shocked to see, but it is possible. 400, 385. Under that, possibly we get our 360 pullback. NVIDIA. So, NVIDIA back down into the 115 major spot. Here we go again, right? Right back down into the 115. We talked about that 115 being like the end-all, be-all spot, and we are right back at it. 115 is this major low right there. I know a little bit sloppy, but that is the major low. I want to show you the shorter-term levels as well. That's why I have some short-term levels on here. So 115 is definitely the big spot. There's no doubt about it. That's going to be somewhere that it looks like it's trying to hold right now. I think you're going to need that to hold above. If it does not, I would assume more weakness. So under 115, if we fail back below that today, I would say shorts very, very easy into the 112, right? And then under 112, I think you go 108.50, okay? So right now, what's very clear, the clearest thing on this chart right now is the fails of these previous lows, right? The fails of these previous lows is extremely clear right now, and that is right at 118. Lows, 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 and that is the exact level that rejected this morning, right? Look at this. If we zoom in, take a look at this 118, 118, 118. So that is a possible failure spot, right? And maybe we create a bear flag, something along these lines at that 118, right? If we see something like this and a failure of 115, that could really get this going. So watch that 118, watch that 118. If we push and fail that again, that is something to be cautious of. If we regain that 118 and break back above this Thursday low, I'd say NVIDIA probably tries for that 200 SMA again. Okay? Now, if we do not see that, I would say you're going to see a lot of drama at the 115. You're going to see some drama at the 112 lows from the overnight session. And below that, I have 108.50. All right? I like the pop and fade idea at 118. That is definitely something that I would be watching. All right. AMD, 115. 115 is your pop and fade idea today. 115 or 120. I like 120 better, but you guys can see right here that 115 has been trying to hold on. Trying. Today, overnight session, drop, retest, starting to reject. So, 115. Watch that level today. If we get some clear fails here today and weakness on the market, I like that 115 fade into that 110 again. If we get over 115 and hold above that, I'd say you fade towards that 120. And that would now be the rejection that you'd really look for at that 120 level and that daily 20 SMA. That could be really nice up there. So 115, 120, 110 demand looks to be that low. Broadcom 220 fails look to be the move. I would definitely watch this today. 220, right? We can see failures, pop higher on Friday, right, into that 227, fail below, and retest rejection, right? So right now you are retest rejection. You have a retest rejection at 220. So I would watch out for that 220 spot on Broadcom. If you remember that 211.11 spot, right, that was the level that we held back above, right, and started to really see upside. That was that daily candle low. That's right here, right? This is 211.11 right here. See this daily low? If we break back below that 211.11, I would watch to see what happens at this 50 SMA, right, which has been a very strong hold spot for Broadcom. We've really held that 50 SMA, and we are even here in the after hours. Or the overnight session yesterday, right? 50 SMA holding strong. I would say if you fail this 220, really see weakness on this market, fail under that 50 SMA, you might be looking at a bear flag here, right? You might be looking at a bear flag here. And that bear flag would fill, in my opinion, the earnings gap up down to 186. This could be a massive trade if we really do see that second leg lower today. If we really see that second leg lower today, I would really be eyes on Broadcom. Because what you've basically done here on the daily chart is you've gapped down, you've made a lower high at the daily 20 SMA. If you start to see that breakdown again, this would be a bear flag, right? And that would probably drive you back down to that 186, 185. So this would really be something to watch if you really get that weakness. However, holy shit, arms through one. No, okay. This is on the daily chart. I thought ARM was through 155 again. I was like, what the hell is going on here? Never mind. The only problem with some of these semiconductor stocks, guys, is you have AMD and ARM earnings this week, and NXPI, which sort of gets it, it sort of gets a little difficult. And, of course, you have the looming headline risk that's across the market. So, pretty hard to trust anything for more than a scalp. 155 ARM, rejection, 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 possible rejection today. If ARM really fails this 155, right, and you sort of see this breakdown of this uptrend, you could see that bear flag back down into 140. I think that's very possible. You got to see what happens at 155 today. TSM, big fail at that 215. Nice fail under the 208, right? Nice supply levels. We had those. 200 is your big spot today. 200. If you fail under 200 here, you probably get downside towards the 100 SMA and possibly towards 188. All right. Let's go to the Mag 7. Apple. So Apple is failing the exact level it needs to get over today. And that could mean a really nice retest rejection short. Lows, 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 break, retest, rejection. Major lows, break, retest, rejection. So if Apple fails 233, fails the 100 SMA, right, this could be a very nice short today at 233, shorting that back down into 227 demand. I would absolutely watch that. 227 demand, if we break that, we probably drop lower. This would be a nice retest rejection at 233. I would watch that and pay attention to that. Amazon holding up pretty damn well, man. Not going to lie, right? Amazon really doesn't seem to care much. Another beautiful hold at the daily 20. Another push back to the upside, but you are back into supply, so a little bit cautious here. You can see right here, the 234 spot has been a very sort of interesting and hold level, right? Whether it's a hold level or a major fail point, it's been a level of interest, that's for sure. Watch the 234 today. If we make a lower high here at 234, that could be a sign of more to come to the downside. Under 234 and a fail there, you probably move back down to 230. 230 and that 20 SMA, that would be your next demand spot down below if you do see downside. If you break under that 20 SMA, I'd say you're coming back down to that 225. Okay? 234. That's the big spot today. Google. 202 to 199, same levels. Google actually holding up quite well itself. You guys can see right here, 199, lows, lows, highs, highs, lows. Well, that downside came right back into that low and once again held. So, not bad on Google, man. It has earnings tomorrow, so that's the question mark. But 199, that's the hold you're looking at. Now, to the upside, 202. 202, 202, 202, 202, 202, 202. So, what I would look for today, break, retest, 202 rejection. If that steps in, you're coming back down to 199. That could be a very nice scalp today. I would absolutely watch that. Nice little scalp, not asking for much. Just some shorts at 202 into 199. Take your profits, move on, have a good rest of the day. That's really it. I mean, that's really what you'd like to see happen there, right? Fail, 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 fail. Break, retest, fail again into 199 demand. Makes a lot of sense. Something to look for there today. If you get back over 202, then that thing's going higher again. Meta. This might be one of my main watches today. Here's why it's my main watch, right? I mean, Meta's just vertical, okay? Is there room to come down? Yes, right? I don't care how strong Meta has been. This has been vertical. Stocks do not go vertical. Neither does Meta. Meta has never gone vertical without coming back. It has never happened in the lifetime of this stock. It's gone vertical, it's come back. It's gone vertical, it's come back. It's gone vertical, it's come back. Vertical, it's come back. Vertical, it will come back, okay? Meta will come back. Now, we got to try to find where we think that starts to happen. And so for me, it looks like it could very well start to happen here on a little head and shoulder, right? And a little lower high here at 680. This could be very nice, right? So let's pay attention to this. 680, 700, 680, right? Here's your left shoulder. Here's your head. Here's your right shoulder. Now, let's see if 680 stays as a failure today. That's very important. If 680 fails today, you're probably going to get your downside move to 660, okay? Under 660, you're going to move down to your 647 and your 637, which then becomes a fantastic buying opportunity, right? You got to make sure you understand that as well. These pullbacks become buying opportunities. I would say it becomes the best buying opportunity right here at 637. That's your buy spot. 637 and the 20 SMA is where I'd buy the hell out of Meta. But for now, it looks a little bit extended. I'd watch that 680 failure today. That's very, very nice. Coinbase. So, who remembers my Bitcoin video, right? A lot of flamage on that video. A lot of flamage. Now, it's still not there, right? It's still not there. Why? Because once again, Bitcoin held that major demand. It once again held that major demand. So, could it hold again? Hell yeah, it could hold again, right? And could the Bitcoin boys rejoice? Absolutely, right? It could absolutely hold here again. This was the must-hold spot. The 92 to 90,000 level was the must-hold spot. And it did it, right? It did it again. You can see right here, this is where it held the last time. Look at where it's holding again. So, this is a must-hold for Bitcoin. 90,000, right, is a must-hold. However, if you recall my video, from from about a month ago, we were talking about Bitcoin on a break and retest, right, being the most bullish look for the crypto bulls, right? You really want it to retest this 80,000 area. You really want it to retest these previous highs, right? This is really where you want Bitcoin to come back down to, in my opinion. If you want to be long Bitcoin, you want it down around this 80K. You want it back at these previous highs. Is there a way to short that into that level? I think there is. And for me, I would be watching IBIT, the Bitcoin ETF. If we look at this 4-hour chart, I would pay attention. If we do get more weakness on the crypto names, right, I would watch IBIT back to 41, right? Right here, right here, right here, right here. You got a breakout. You have not retested this level. So I would absolutely pay attention to the possibility of that retest coming in at some point at 41 on IBIT. That will have to be a break under, in my opinion, 50. Right? So what I would do is I'd create an alert here. I'd make sure you know if the IBIT is found under 50. If it does, I think you got yourself a little low volume downside move. That's very possible. So something to watch, guys. Something to watch. Not sure it's there yet, but if we continue to get weakness, it might be. Palantir, wanted to point this one out today. Pretty strong in the pre-market. You can see 82 and that's 78. Palantir really just shrugging off anything here. I mean, it's down like 2 points. 78, that's your key spot there. CRM, pretty valid hold on CRM again of that 330 spot, right? We've had that level. Watch for the fails of 346, 345 right here. Watch those fails. CrowdStrike, 390 right here. 390. If I go into that 30-minute chart, this could be a really nice break and retest short, by the way. I would pay attention to this today. You can see right here, right? Lows, break, retest. If that rejects, you're filling this straight up move. This actually might be one of my top watches today. Very clean chart. Lows, right? Lows. Break below the lows. Look for the short at the previous lows at 390. If you start to see that roll over, you have this very low volume move that could very clearly fill that gap towards 370. I would watch that. If you get back above 390, then you're pushing back higher, right? Microsoft for margin call. Man, I hate this chart margin. I'm going to be honest with you, man. I think it's one of the ugliest charts on the entire stock market. At least the ugliest chart in, for like a large cap tech name that you would traditionally like to trade, right? I mean, just a miserable chart. It's been sideways for forever, basically. I think to clean this chart up, you really need to get back down here, right? To really just reset this chart. When I look at this, I just want to reset, right? Give me a reset. Just absolutely tank this thing and reset the whole chart, right? That's what I want when I see this. Give up, right? I'm tired of seeing these sort of shit bounces. Just absolutely give up and reset the chart, right? That's sort of what you need here, in my opinion. If you get that, 380 is really where you want to absolutely nail it. I think that would be a great spot to nail Microsoft on a long down at that 380, big time, right? If we can get down there. But for now, you just sort of get these lasting, demand holds at seemingly strong levels that pretty much result to nothing, right? It just results to nothing at the end of the day, right? You get a pop and it results to just another 447 failure, and you come right back down to it. So, 400 is definitely a big spot margin. You probably see something off that, but man, I don't like anything there. I mean, what are you going to long that back into? This shit show, right? I don't know, right? I'm not interested in longing back into this absolute shit show here. Look at all this. Look at all this noise. It's just a bunch of noise. Right? I don't really feel confident there at all. So I think you could look to fade under 400 into 380 and see if this weakness can continue. I think you just let this thing absolutely tank to 380 and try to restart this chart. But yeah, Microsoft's just a really tough one. For me, I just don't like the way it trades. All right, 850. Let's go ahead and jump into the futures one more time, show you guys what we're looking at. Right now, the fade spot is starting to show. This 21,260 level is definitely starting to reject. 21,150, 100 SMA, 21,000. This is a big demand down here, guys. Please understand that this area down here is going to get sloppy, right? It's a sloppy area down here. Under 21,000, it cleans up, right? Under 21,000, it cleans up for a nice short. Or I think back higher at like 21.4 or 21.560, it cleans up for a fade. This area seems very sloppy. I'd be a little bit careful to see what the market does early morning. S&P 500, I would say watch for the short under 59.50 into 5,900. On the SPY, 590. 590 into 585 is a nice gap fill you can pay attention to today. Watch the fades up at 596, 598. QQQ. It looks like, let me get a level on this QQQ, because where is it starting to reject? Is it that 515 spot? I think we've had that. Yeah, we have had that 515 on our charts before. Where is this 515 stemming from? Let me go back. Oh, okay. Yeah, okay. Yep, this is a big one. 515, right here. Now I remember. See these previous highs? 515? That's exactly where we're rejecting today. Huh. Okay. Yeah, that's important. If we stay under that, guys, that stays weak. That stays weak. If you do get a little pop, that's even better, right? If I bought puts on Friday and Hellman Week, do you switch selling market open? I mean, Julian, however you pronounce your name, man. Here's what I'd say, okay, brother? When you bought those puts, did you the best case scenario for that play to be a profit taker was a 1.5-2% drop on the market overnight, right? That's exactly what you wanted. That was your beautiful, oh my God, I'd love if this happened, that was your thesis. Best case scenario, we get a gap down on the market of 2%, 1%, and I open the morning up 100, 200% of my puts, right? Why are we instantly, not taking that profit now, right? That's what I think about, right? Why this morning am I now saying, oh, I've gotten that move and now I'm not going to sell it, right? It's greed, right? That's just greed. So why not take the profits, right? Take that win and look for a move higher to reshort, right? Because, guys, the short sellers that are really profitable, right? The people that are really good at shorting the market are not shorting after gap downs, right? They are waiting to hawk their prey, right? They are hawking their prey. They're waiting for the idiot buyers, right? And I'm not saying, you're an idiot, I'm an idiot. I'm just saying in general, right? They're waiting in their mind for those idiot buyers, right, to buy the upside move that's coming in, right? And they're trying to spot, and they got their sniper scope on, and they're trying to focus on where's that next fade spot, right? Those are the people that make a lot of money on the short side, right? They're the ones that are just sort of, sitting back, waiting for that sort of upside to come in. Where's the next fade spot? Where's the next fade spot, right? Is it here at 6060? Is it at 6,000? As we move higher, where am I hawking those bulls? Where does that bull trap come in, right? Those are the people that are going to crush it on the put side. It's not going to be the people that wake up this morning and start slamming puts at market open. Oh my God, buy puts, right? That's typically not the way that these people make money, right? That's not the way that we're going to make money on the put side. long term. We're not going to be slamming puts at market open down 1.6%, right? We're going to be looking for that bull trap to come in, back to higher levels, refade the move, right? So if I was in puts this morning, yes, I take my profits, I let it move come back in, and I look to refade it, right? That's the game plan, okay? All right, guys. Hope you have a fantastic fantastic day. Interesting morning. I think a lot of opportunity out there. And if we do flip to the downside, guys, the pop and fade is a beautiful trade. Embrace it. We haven't been able to trade the pop and fade for a little bit. I think maybe last week was the first time you started to get it to come in. Maybe last week and a half. The pop and fade is a beautiful trade, guys. Learn it, right? Use these levels to find where that fade comes in. Pop and fade trades provide some of the juiciest put opportunities. And if that's the market we're back in, so be it, right? That's going to be the market that I have to adjust to. So let's see what February does. Let's see if we enter a pop and fade market, or let's just be a little bit careful with the pending headline risk that we are facing here in the markets right now. So press that like button, subscribe to the channel, and I will see you guys tomorrow. Peace and love.